We are doing this change in profit sharing ratio, the treatment of reserves and accumulated profits. Do you know what
Yes,
is
ma'am.
accumulated profits?
Ma'am, I don't think so. I know.
Accumulated profits is the profits that you keep aside in business.
Okay. Yes, ma'am.
Okay. Suppose I have earned 100,000 rupees and I take home only 50,000. Okay. I take home
Yes, ma'am.
50,000 and I let 50,000 to remain in the business. So this money that is profit for me, which I allow it to remain in the business, this accumulates, you mean to say,
Accumulates.
keeps on collecting in the business. Okay.
Yes, ma'am.
So this accumulated profits are also called reserves, which is kept as a reserve, kept aside for some work in the business. Can you tell
Yeah.
me what is the balance of profits?
Balance of profits. Uh, I don't think so. I know balance of
Do
profits.
you know the rule of nominal account?
Yeah. Yes, ma'am.
What is the rule of nominal account?
Debit all expenses and losses and credit all income and gains.
So all the expenses and losses would have which balance?
Uh, like
All the losses will have which balance?
debit balance.
All the losses would have debit balance. All
Okay.
the gains would have which balance?
Credit balance.
So all the gains would have credit balance. So if you have profits, it would have which balance?
Credit balance.
If you have losses, it will have which balance?
Debit balance.
So if you have accumulated profits, it will have which balance?
Credit balance, right?
Yeah, so if you have accumulated profits, it will have which balance?
Credit balance.
And if you have accumulated losses, it will have which balance?
Debit balance. Yeah.
So accumulated profits will have credit balance. Accumulated losses will have debit balance.
Debit balance.
Balance sheet, how do I come to know whether a particular thing is an accumulated profit or whether a particular thing is an accumulated loss for me? So if in your balance sheet you have on the credit side, or I would say you have it on the liability side, profit and loss
Yes, ma'am.
account, general reserves, reserve fund, workmen compensation reserve, investment fluctuation reserves. So these are all accumulated profits. How do you know it
Yes, ma'am.
is accumulated profits? It will be appearing on the liability side or the
Liability.
credit side. Okay.
Yes,
Now,
ma'am.
if something is an accumulated loss, what is accumulated loss? It is profit and loss account, deferred revenue expenditure, advertisement suspense account. Just write
Expense
all
account.
this and try to memorize, then I will teach you the treatment of it. Now, you have to treat when you have your balance sheet, okay? You have to treat accumulated profits and accumulated loss.
Yes,
Okay?
ma'am.
When the question is silent, or when the question tells you that the accumulated profits have to be distributed or accumulated losses have to be distributed, that means these profits have to go to the partners, because ultimately
Okay.
either the profit or the loss, it belongs to the partners, so it has
Partner.
to be given to the partners. So let's talk about accumulated profits. Can you tell me what balances does accumulated profits have?
Credit balance.
Okay, so it has a credit balance. That means if you have to give it to the partners, it will go to partners on which side?
Credit, debit side.
Accumulated profits will close.
Yeah.
And it will be given to the partners. Anything that is given to the partners goes on which side?
Credit side as
On
a
the
profit.
credit side of the partner's
Yeah.
capital account. So if the
Okay.
question is silent, they don't tell you what you are supposed to do with the accumulated profits. Or they tell you that give the accumulated profits to the partners. So the profits will close. That means profits have a credit balance. You will debit them, whatever name is there. Okay.
Yes.
Workman compensation fund, investment fluctuation reserve, contingency reserve, reserve account, profit or loss account. It will close. So you will debit it
Yes, ma'am.
and you will give it to the partner. So you will say partner's capital account credit. This is treatment for
Yes, ma'am.
accumulated profits.
Accumulated profits. Okay.
What is the treatment for accumulated losses? Losses have which balance?
Debit balance.
So when you close, you will credit the loss or you will debit the loss.
Debit the loss.
Losses already have a debit balance. So when you will
Yeah.
close it, you will do what? Debit or credit?
Credit, I think. I didn't get this.
See, the existing balance of losses is debit. When you're giving
Yeah.
it away, so this will get cancelled. To
Okay.
cancel a debit, what do you do?
Credit it.
Credit it. To cancel a credit,
Okay.
what do you do?
We debit it.
Debit it. To cancel a debit,
Yeah.
what do you do?
Credit it.
To cancel a credit, what do you do?
Debit it.
And to cancel a debit, what do you do?
Credit it.
Yeah. So accumulated losses have a debit balance. Now you have to cancel it and give it away to the partners. So you will credit it. So whatever names which is mentioned over here, if these things have a debit balance, so you will do what? You will credit it and you will debit partners capital account. This is
Okay.
accumulated losses transferred to partners.
Yeah.
Accumulated profits transfers to partners will be partners capital account credit, and
Credit.
accumulated
Yeah.
losses
If
transfer to
losses, partner's
partners
capital account will be debit.
debited. So if you remember your partner's capital account, partner's capital account will always have the opening balance.
Yeah.
Below that, there is
Cash point.
additional capital that they bring in, right? If
Yes,
there
ma'am.
is goodwill raised, it will come on which side?
Credit side.
Credit side. If there is goodwill written off, it will come on which side?
Debit side. Yeah.
It will come on the debit side. If you have to distribute the accumulated profits, it will come on which side?
Credit side. Cumulative profits. Yeah.
Accumulated profits. Accumulated profits would be in the name of contingency reserve, profit and loss account, workman compensation, investment fluctuation reserve. If you want to distribute the accumulated losses, it will come on which side?
Debit.
So it will come on the debit side. So this is the partner's capital account rough figure. Okay.
Okay.
Case A. Case A was what? When there is nothing
Okay.
mentioned about accumulated profits or losses. Case A was there is nothing mentioned, or they tell you
Yeah.
distribute it. So in that case, you will distribute it. Now your case B. Okay. They tell
Yeah.
you that the accumulated profits or the accumulated losses are not to be distributed. They don't have to be distributed, or they tell you it is to be shown in the new balance sheet at same book value. What is your
Yes,
case
ma'am.
B? Can you please repeat?
And then there's nothing mentioned,
There
right?
is nothing no, if there is nothing mentioned, you give it.
Yeah.
If they are telling you it is not to be distributed,
Not to be distributed. Yeah.
or they tell you it is to be shown in the new balance sheet at same book
New
value.
balance sheet at same book value.
In that case, what do? You pass adjusting it.
Yeah, pass it.
Adjusting entry, or you pass the net effect. What do you do in that? If in that case you pass adjusting entry or you pass the net effect, all your accumulated profits minus your accumulated loss. Okay, you will have a net effect.
Yes, ma'am.
Which is more, then the net effect will be positive.
Yeah.
If the profits is less and accumulated loss is more, your net effect will
Then
be
net effective is negative.
okay.
Yeah.
If your net effect is positive, in that case, the adjusting entry will be passed with gaining partner to
Partners.
sacrificing partner. Gaining partner debit, sacrificing partner credit.
Sacrificing partner credit.
If the net effect is negative, then you do ulta. Sacrificing
Yeah.
partner to gaining
Partner.
partner.
Yeah.
Okay. If your net effect is negative, then you will do reverse, sacrificing partner to gaining partner. When do you pass the net effect?
Ma'am,
When
when
do
net
you
effect
do
is
the net effect?
yeah.
When do you do the net effect?
Ma'am, when net effect is positive and negative.
But when do you do it?
No, after we add the accumulated profits and subtract the accumulated
But
losses.
when are you going to calculate this net effect? When the
Uh,
question tells you that the
oh, okay.
losses are not to be distributed,
We distributed.
or it is to be shown in the new balance sheet at same book value.
Okay.
When are you
Yeah.
going to do this net effect?
And when it tells us that it's not to be distributed, or when we have to make a new balance sheet at same book value.
Okay. If the net effect is positive, that is profit minus loss is positive, then you do gaining partner
Yeah.
debit, sacrificing partner credit.
Partner credit.
If the net effect is negative, then you do
Sacrificing
partner
partner
debit.
debit, gaining partner credit.
Okay, gaining partner debit. So this is with accumulated profits and losses. If nothing is mentioned, just give it to the partners.
Yes.
Okay, if nothing is mentioned or they tell you distributed, give it to the partners. For profits, it will be partners capital credit. For losses, it will be partners capital debit.
Debit.
They tell you not to be distributed or show at the new balance sheet same book value,
New
then
balance
you pass
sheet.
an adjusting entry.
Yeah.
Okay. Now there is workman compensation reserve. Do you know what is workman compensation reserve?
No.
Okay. See, whenever the company has good amount of profits, so they have made a profit of 150,000 or 1,50,000 rupees. Okay.
Yes, ma'am.
Just to ensure the welfare of the workers, or to ensure that if something goes wrong for the workers, there must be some money that should be kept aside to compensate these workers. So every
Yes,
year,
ma'am.
the company might have a policy that they keep every year 10,000 aside from the profits. They keep it as a reserve, to a reserve which is called what? Workmen
Workman
compensation
compensation reserve.
reserve. Now, when they transfer their profits, this is also profits. This is also the accumulated profit,
Yes.
and this is also the accumulated profit. The difference between these two is that this can be used for any purpose.
Yes.
This amount can be used for any purpose. And this amount, when you transfer from here to a special reserve, that is a workman compensation reserve, this amount can only be used to compensate your workers in case there is some disaster that is happening. Say, for
Yes, ma'am.
example, you have a worker who was working in your factory, and while working in the factory, he has injured his hand in a way that it is no longer capable of working. In that case, this worker is going to ask for claim. Okay,
Yes,
he
ma'am.
will ask for claim from you. This claim, if the worker wins, it has to be given to the worker. So the company might keep some money every year aside for workmen compensation reserve. This is when, if for some unforeseen condition, you have to compensate your worker, then the money will go from here. From where?
Yes, ma'am.
From
From
where will
workman
the money
compensation
go?
reserve.
So the money will go from workmen compensation reserve. Okay? Are you with me?
Yes, ma'am. Yes, ma'am.
Yeah. So in that case, whenever there is a claim, okay, for workmen compensation claim, it has to go from the workmen compensation reserve. Are you with me?
Yes, ma'am.
Okay. Now, there are cases in this. Say, for example, I have in my workmen compensation reserve 60,000.
Yes, ma'am.
The workmen compensation reserve is accumulated profits or accumulated loss?
Accumulative loss.
Profit. It is kept
How?
aside from profit. Money
Okay.
is kept aside from the profits. So this is
Okay.
accumulated profit. These profits belong to whom?
Workman compensation reserve.
It belongs to the partners,
Oh,
owners.
yeah, partners.
If there is no workman compensation claim, full money will go to whom?
Partner.
Partners. So now there can be a possibility that the claim can be there.
Yes, ma'am.
There could be a possibility, right?
Yes, ma'am.
But you have a claim. So now let's see.
Yeah.
There are 4 cases in this. First case is there is no claim.
Okay.
No worker is claiming anything.
Yeah.
Okay? The first case is that there is no claim and no worker is claiming anything. Come on, in that scenario, tell me this full money will go to whom?
Partner.
Partners. So the journal entry would be it will go to the partners. The partners are going to receive this money. So partners capital or current account credit. Are you with me?
Yeah.
And debit will be
Yes, ma'am.
workman compensation reserve.
Compensation reserve.
The full 60,000 will be debited to workman compensation reserve and you will close this and you will credit to partners capital account or current account. Are you with me?
Yes, ma'am.
Okay, fine. Suppose case number 2. You have a claim of 60,000
Yes, ma'am.
and your reserve, workman compensation reserve is also 60,000.
Yeah.
In this scenario, will anything go to the partners?
No, none of them. Nothing will go.
Nothing will go to the partners. So in this case, what will you do? You will close the workman compensation reserve. You will do workman compensation reserve debit 60,000 because that has
Yes.
to close irrespective of anything. And instead
Yes,
of
ma'am.
crediting partners capital account, you will credit the claim account.
Okay.
Instead of giving it to the partner, you are going to
Partner
give
will
it to the worker. So it will go to
worker.
the
Yeah.
worker's claim account. It will go to worker's claim account, which is called the workman compensation claim account.
Claim.
Can you please repeat? It is called what?
Workman compensation claim
Account.
account.
So it will go to provision for workman compensation claim account. Are you with me?
Yes, ma'am.
Okay, fine. Case number 3. When your claim is less and reserve is more. Say your claim is 20,000 and reserve is
Yes.
60,000. Tell me in
Yeah.
this scenario how much will go to the partners?
None.
How much is the reserve?
Wait, no. 60,000.
How much is the claim?
Oh, okay. The claim is 20. Yeah, okay.
How much is the claim?
20,000.
So how much will go to the partners?
Like 40,000.
40,000. So the journal entry would be
Okay.
workmen compensation reserve debit. How much? 60,000.
60,000.
Workmen compensation claim credit. How much?
Yeah, 20,000.
And partners capital account, how much?
40,000.
40,000. Are you with me?
Yes, ma'am.
Let's go to the next scenario. Claim is 85,000.
Yes.
Reserve is 60,000.
Yeah.
Will anything go to the partner?
No, ma'am. The claim is more,
Claim is more.
right?
That means your loss is more.
Yeah.
Loss is more, that means it's a good thing or a bad thing.
Bad thing, man.
Bad things appears where?
In the debit side,
Of which account?
revaluation account.
How much is the bad thing happening?
Here, ma'am, 25,000. Yeah.
25,000. So now your claim is more, but reserve is less. Reserve has to
Yes, ma'am.
close. So workman compensation reserve is going to close by how much? 60,000.
60,000.
There is extra bad thing happening, which could be like an
Yes.
unrecorded loss. So
Yes, ma'am.
revaluation account will be debited by how much? 25,000.
25,000.
And how much will go to the claim?
Uh,
And compensation claim, how much?
85,000.
85,000.
Yeah.
Now, whenever you create an unrecorded loss, which is a revaluation account, because of this excess claim, this revaluation account has to close. So it is debit over here, so it has to become what? Credit.
Credit.
Okay. So this
Right.
is a revaluation loss indirectly.
Yes, ma'am.
Okay. So this revaluation loss has to be distributed amongst the partners. So this has to
Yeah.
close and the loss has to be given to the partners. So you would
Partners.
partners capital account debit. How much? 25,000. And
25,000.
revaluation account credit 25,000. I'm giving you some time. Please try to digest it. The writing part you can do later after seeing the video. Now there is another thing which is called the investment fluctuation reserve. What is it called?
Investment fluctuation reserve.
Say for example you have investments. Where does investments appear?
Ma'am, like when a partner invests their own money into the
But
business,
where
right?
will it appear in the balance sheet?
Credit side.
The balance sheet, does it have a credit side?
Oh, wait, no. Balance sheet. Yeah. Accumulated profits.
Invest balance sheet have a liability side?
Oh, yeah.
And which side do they have?
Asset side.
They have a liability side and they have an asset side. Are you with me?
Yeah. Right. Yes, ma'am.
So investments would appear on the asset side.
Asset side.
What is the meaning of investment when we are investing in somebody else's company? Okay. Now these investments, it is appeared in the books of accounts at the market value. The
Yes,
market
ma'am.
value can increase also and the market
Yeah.
value can decrease also.
Decrease
All
also.
depends upon the market. So to adjust the increase, if it is increasing, you will have a profit. If it is
Yes, ma'am.
decreasing, then you will have a loss. And
Loss.
this loss has to be recovered from your reserves. So
Yes, ma'am.
when you have a loss in the value of investments and when there is a fall in the value of investments, you would take the profits that you have kept aside in a name which is called investment Fluctuation reserve.
Fluctuation reserve.
What is the name? Investment
Investment
fluctuation.
fluctuation reserve.
So when the value of the investments are changing, there is a reserve that is created which is called the investment fluctuation reserve. So if the value of
Yes,
the
ma'am.
investments are falling, you will reduce the value of investments and you will also reduce your investment fluctuation reserve. Are you
Fluctuation
with
reserve.
me?
Yes, ma'am.
So now, how much is your loss? How much is your gain on the investment? You come to know when you compare your book value of your investments with the market value. Whatever is appearing in your balance sheet, okay, that is called
Yes,
your
ma'am.
book value. What is it called?
Yes, ma'am.
Book value. Suppose
Book
the book
value.
value of your investment is 50,000. Are you with me?
Yes, ma'am.
Your book value of your investment is 50,000. The market value of your investments is 50,000. Okay. And you have
Yes.
investment fluctuation reserve 80,000.
Yes, ma'am.
Investment fluctuation reserve 80,000. Tell me what is
Yes, ma'am.
investment fluctuation reserve? Accumulated profit or accumulated loss?
I think, ma'am, profit. Cumulative profit,
It is
right?
accumulated profits. So if
Mm.
nothing is mentioned, this would go to whom?
Partner.
Which side?
Credit side.
Okay, partners capital account credit side. Very well. Now let's look at your investments. Book value is 50,000 for your investments.
Yes, ma'am.
Market value is 50,000 for your investment.
Yes, ma'am.
Book value is equal to the market value. Tell me, is there any loss because of investments to you?
No, ma'am. There's no loss.
There is no loss because of investment to you. So this entire investment fluctuation reserve will go to whom now?
The partner or
It will go to the partners. So this
yeah.
entire investment fluctuation reserve, the benefit of this would be distributed to the partners because there is no claim that is created. So it will go to the
Yes, ma'am.
partners capital account and investment fluctuation reserve will be debited by full 80,000.
Yes, ma'am.
Are you with me?
Yes, ma'am.
Are you sure you're with me?
Yes, ma'am.
Okay, fine. Now case number 2. Your book value is less than the market value. Say for
Yes, ma'am.
example, your book value is 20,000. Okay.
Yes, ma'am.
Market value is how much?
Less. I
Market
mean,
value is more. Market value is
yeah.
50,000.
Yeah, book value is less. Yeah.
50,000. Market value is 50,000. Tell
Less
me, do you have
50,000.
a profit or a loss?
Loss.
Book value is 20,000, but in the
Yeah.
market, it is for 50,000.
50,000. Okay, so yeah, it's a profit.
In the market,
It-
it is for 50,000. So it is a profit, and the value of your investment is increasing.
Yeah,
Okay. The value of your investment is increasing by how much?
30,000.
30,000. So it's a good thing that is happening.
Yeah, yes, ma'am. Yeah,
And good thing happens where?
credit side.
Revaluation
Like
account, credit
revaluation
side.
account.
Okay. That means, is there any claim created for your investment fluctuation reserve? Anything that will reduce from here?
No.
No. So this entire amount of investment fluctuation reserve, there is no claim that is created. It is going to be distributed to the partners.
Yes, ma'am.
So you would say investment fluctuation reserve what? Debit 80,000,
Yeah.
Full
To
80,000
partners
is going
capital
to be
account credit.
distributed to the partners. At the same time, another thing is happening. The value of your investment is going up.
Yeah.
It is going up by how much?
By 30,000.
30,000. So investment is going to increase by 30,000. Investment is going to increase by 30,000. And because it is a good thing, it will be revaluation credit.
Yeah.
So investment will be debited by 30,000 because value of your investment is increasing and revaluation account will be credited. Are you with me?
Yes, ma'am.
You have a profit
Yes, ma'am.
because the investment value is increasing.
Yeah.
So this revaluation will be closed and you will say revaluation account debit 30,000 and this profit on revaluation will be given to whom?
Yes, ma'am.
This profit on revaluation will be given to whom?
The
The
partners.
partners. So
Yeah.
partners capital account credit. Are you with me?
Yes, ma'am.
Are you sure?
Yes, ma'am.
So there was no loss. Full reserves given to the partners. Increase the value of investment and revaluation account credit. Close revaluation and give the profit on revaluation to the partners.
Partners. Yes, ma'am.
Okay. Case number 3. Book value is greater than market value.
Yeah.
Say book value is 50,000. No, 80,000. Market value is 50,000.
50,000.
Tell me, what is happening?
Loss
Loss, how much?
by 30,000.
30,000. So you have a loss of 30,000. Where will you take this loss from?
On the partners.
You have a reserve, right?
Yeah. Oh, yeah.
Investment.
Fluctuation reserve.
So from this investment fluctuation reserve, where will you remove the loss from? 30,000.
30,000.
30,000 is the loss. So how much will you
Yeah.
distribute to the partners?
How much, ma'am? Like 5,000, 50,000.
50,000 you will distribute to the partners. So the book value
Yeah.
is 80,000. Market value is 50,000. Investment fluctuation reserve is 80,000. Are you with me?
Yeah. Yes, ma'am.
Debit the investment fluctuation reserve by how much?
Action reserve. Yeah.
80,000.
80,000.
30,000 is your loss. Your investment value
Loss.
is coming down.
Yeah.
30,000 is your loss. Your investment value is coming down. So your investment will be credited by how much?
30,000.
30,000. And the partner's capital account will be
Partners.
credited by
50,000.
50,000 in old ratio. Okay.
Yes, ma'am.
Are you with me?
Yes, ma'am.
Okay. Now understand. When the fall in the value is equal to the investment fluctuation reserve, your investment is book value is 80,000.
Yes,
Okay.
ma'am.
Market value is 0.
0. Ma'am.
And investment fluctuation reserve is 80,000.
Yes, ma'am.
So there is a fall in the value.
Yes, ma'am. There is.
How much is the fall in the value?
How much? Like,
Book value is 80,000.
yeah, 80,000.
In the market, you're not going to get anything.
Anything. Yeah.
0. You're going to get in the market.
0. Right. Yeah.
That means 80,000 is the fall in the value.
Okay. Yeah. 80,000.
And 80,000 is there in the reserves.
Yeah, there is.
So in that case, what journal entry you will pass? You will use the full investment fluctuation reserve
Full
of
investment.
80,000. So
Yeah.
investment fluctuation reserve debit, investment
To
credit.
investment account. Yeah.
Are you with me?
Yes, ma'am.
Are you sure you're with me?
Yes, ma'am.
Okay, fine. Come on. Now I'm changing the value of investment fluctuation reserve. Investment fluctuation reserve is 20,000.
20,000. Yeah.
Investment book value is 80,000.
Yes,
And
ma'am.
market value is 20,000. Explain me
Yes,
this
ma'am.
scenario.
Yes, ma'am.
I said explain me the scenario, not yes, ma'am.
Okay. Okay, yes, ma'am. The book value is 80,000 and the market value is 20,000. Right.
Hmm.
So, ma'am, the market value is less
Hmm.
by at least 60,000.
So there is fall in the value of investment.
Fall in the value of investment.
How much?
60,000.
60,000. Where will you adjust this 60,000 from?
Investment fluctuation reserve. But
But is there sufficient investment fluctuation reserve?
there is not. It's not.
It's
No.
not. So investment fluctuation reserve will be debited by how much? By full 20.
By full 20,000.
Investment account will be credited by how much? How much
60,000.
is the fall in the value?
60,000.
60,000. So revaluation account will be debited by
40,000.
40,000. Because 20,000 loss you've adjusted from investment fluctuation reserve. Are you with me?
Yes, ma'am. Yeah.
Then this revaluation account will be closed. That is, loss on revaluation will be distributed. So partners capital account debit 40,000 and revaluation account credit 40,000.
40,000. Yes, ma'am.
Are you with me?
Yes, ma'am.
So this is your explanation for your investment fluctuation reserve.
Fluctuation reserve.
I will stop the video here. I want you to go back, see the video again,
Yes, ma'am.
memorize the treatment for workman compensation reserve, accumulated profits, accumulated losses, and investment fluctuation reserve. And then
Yes,
you
ma'am.
will try these sums which are there down. Okay?
Okay, ma'am.
You
I
will
will do.
try the sums without seeing, and then I will do these sums tomorrow with you.
Okay, ma'am. Fine.
Okay?